Hey, welcome back to another Bitcoin Reformation podcast. I'm Ben Haupt, joined by my good friends David Rufner, Jared Townley. Great to be with you again. And we are talking this week about something that we read together. And so it'll be fun to talk about. But first, let's just get a little update on how things are going. So, David, how are things with the Rufner clan?
Yeah, we are well. We've adjusted to the older boys being off to college, and then it's just sort of local high school stuff. We've got homecoming this weekend at the local high school. So for our sophomore and junior, as far as weather here, this is monsoon season. At least this summer it's producing. So lots of like tall, big thunder clouds rolling through. And I was telling Jared, whether he knew it or not, he's just only one county away from where I sit. We're 3 hours apart, and yet only one county away. I sit
Amazing.
here in San Bernardino County, California, the largest county in all 50 states, just slightly smaller than the size of West Virginia. So he told me earlier he'd been hearing about weather in San Bernardino County, and I said, "There's a reason. It's only a half an hour from you." In fact, his edge of San Bernardino County is a half an hour from him and 2.5 hours from me, just to put it in perspective. But yeah, that's been great. We get showers, we get lightning, so it's a mixed bag. We need the water, but it tends to come with the lightning, which triggers small fire snags on hillsides and mountains and down in the grasslands below or the desert grasslands. So, but it's good. Our kids love it. Coming from the Midwest, when it rains here, they just adore the rain because we get so little of it. So that's what's happening. Last Friday, a week ago from now, I think both of you know, but I had the chance to finally, after 5 years, hike to the top of San Gorgonio Mountain in the San Gorgonio Wilderness, and that's at 11,503 feet. So it was about just shy of 5,000 feet of climbing that day, 21 miles. The hike was great. My body, since then, I've been recovering. Let's just put it that way. It was a good long day there. So I'll consider this a warm up. The dream someday is to do Mount Whitney, which is about 3, 4 hours north of here. And that's the highest point in the lower 48. Mount Whitney. That's up at 14K. It starts higher, but goes higher. Is a bigger hike, about another 2,000 feet of vertical climb in a similar length. So yeah, Gorgonia is a good warm up for that. Hopefully, so that's me sharing with you how I got to kind of play. I love the idea of having some adventure out there in God's created world to kind of gear up for, be excited about, and I finally got to do it. I never kind of consider these moments as me, David Ruffner, having conquered anything. I had a great day going to the top of Gorgonio. I'd love to do it again on another day. Weather could move in, or injury could happen, or whatever. But it was really exciting. How about you guys?
Yeah, so we just had gotten off the tail end of a visit from my brother and sister-in-law. And so that was just absolutely fantastic to see them again. We went from seeing them every week in worship and church and then hang out a little bit afterwards to this is the first time we've seen them since we moved here in 5 months plus. So they had met
So
not they were here in
they were
yeah.
at your prior church.
Yeah, they were like half an hour away and became members at St. Luke there where I was. So it still is a really big adjustment for at least me and
Wow.
my brother. I mean, we have a very good, close relationship. And so it has manifested and required us to change that, obviously. So it was really good, really meaningful to have them here, for them to meet Judah and just to be together again and show them around. We took them outside. We did some hiking, a couple of places. Took them to some of the fun stuff that we love around here, which was just so good to share in the things that we love with the people that we love too. So that was really, really good. Filled my soul, filled my cup. But as you all know, when you have to do that difficult thing of see you later or say goodbye, it's a hard thing to say, a hard thing to do too. So that was really good. I think in the work life here, we just had a really exciting meeting with an interior designer. So we're dreaming big about space and what we could do more with our space and how that might fit with what we're trying to do as a church. And I was talking to the principal that I'm usually pretty confident in what I feel like is the next right thing. But then when I either get what I want or someone says, okay, let's do it, then I have this like, oh, really? Like, we're actually going to do that? I don't know. Like, should we? I mean, is that really the right thing? It's almost this really weird second guessing sort of thing. So as she left, he turned to me and goes, so what do you think? And I'm like shaking in my boots, like, I don't know. Like, is this really the first thing I want to like push people as they say, oh, pastor wants us to do this thing. He's asking for our money. Like, is this the thing you want to do? It's exciting and terrifying all at the same time. So very exciting and dream, but also hey, is this what we should be doing? Big questions that I am wrestling with, that we are wrestling with here too. So all is well though. It's good to be back. It feels like we haven't been together again forever. Even though I know it's only been a couple of weeks, it still feels like it's been way too long. So it's just good to see both of your faces, to hear your voices today as well. So Ben, what's going on in your world?
Yeah, likewise. It's great to be together. Jared, when you were talking about getting a interior decorator for here, I first thought that you were at home, and I was like, wow, the Townleys are doing well, man. They're like, hire an interior.
We're not about to spend that on our rental.
That's great. No, it's things are good our way. We are making the adjustment still after dropping Aiden off at college at Concordia Irvine. That's been a big change for our family, but really a good change. Not so much that Aiden left, the parting always difficult, but in a lot of ways we've been waiting for this, gearing up for this for a long time. It really, there was this moment, and I don't know, maybe I shared this on our last episode, but when Aiden was walking away from us, it was like he was 4 years old and he was just going off to preschool or something. And so still just sitting with that, but overall it's been great. Aiden texts a lot, and I would say I talk to him just as much now as when he lived at our house. Because when kids are junior and senior year of high school and they're driving, they have friends, they're not around much anyhow. Having a ton of fun with our younger son, Noah, who is now kind of getting all the attention from his mom and pop that he didn't get before. And for some kids, that might not be a welcome thing, but Noah's really enjoying it, and we're really enjoying spending more time with him and hanging out. And so that's good. And PLI stuff is just going fantastic. I feel like, David, I'm primarily just in the role of fundraiser, like you are, advancement. That's been my primary role these days, and we've had some really big pledges, and I'm very, very grateful for the people that have partnered with us. So yeah, we're doing fantastic. So great to
Wonderful.
great to jump in. So let's dive into this report. Jared, you brought this to the attention of David and me. So do you want to kind of kick it off?
Sure. So I'm always scrolling on X, and I mean, it's not necessarily entertainment. At least when I'm trying to convince myself that it's a justified way to spend my time, I'm learning, right? So I'm trying to find things that are more than just, well, I disagree with that, or I disagree with this, or Bitcoin's going to be $1 million, whatever. And so I'm always looking for things that have some substantial meat on the bone, if you will, but also for things that have, if you want to call it, authority or some sort of professionalism behind them. Because it's not that I don't necessarily trust someone if they don't work for a big investment company, but I feel like those sort of opinions carry a little bit more weight and clout outside of our circles if it does come from someone who, quote unquote, knows what they're talking about. And so we've done a few reports in the past looking at BlackRock's report that they did about Bitcoin. We've looked at a Bitwise report from the past about its position in a modern portfolio and what a different allocation percentage does to that portfolio, if it's average and all those sort of things. And so I was scrolling the other day and stumbled upon this one. It's a new report by Bitwise Investments. So they're, again, an investment firm that manages money for people. They have ETFs that you are able to buy on and in your brokerage account, all these sort of things, and have really always been, at least in my perspective, somewhat on the leading edge in the crypto world, but especially too in the Bitcoin world. And so the report that they've come out with is called Bitcoin Long-Term Capital Market Assumptions. That's a mouthful and a half. So this came out in August 2025. We'll make sure we put a link down below in the description so that you can look at it if you'd like to follow along or see it. But when I saw it, I'll start with the most clickbaity, the most, I don't know, the biggest sort of thing that a lot of people were picking up from this was their forecast around price prediction. So again, we're just talking about somebody else's work here. This is not investment advice. Do your own research, all those sort of things. But they write this talking about the price of Bitcoin. And then maybe we'll get into why they say that and what their reasons are for, because I think that's where this gives some, again, meat on the bones and some things that might not sound that insane or that ludicrous to say, hey, I could really see how that might play itself out. So they say, we forecast Bitcoin will be the best performing institutional asset over the next decade, with its price rising to 1.3 million by 2035, a 10-year forward compound annual growth rate of 28.3%. Those returns will come with significant volatility, though that volatility will be lower than historical averages. And so I'm pretty sure the first thing I saw was somebody tweeting that Bitwise says Bitcoin to 1.3 million by 2035. And that's the clickbaity thing that I think gets a lot of people in it. But they go through and walk through in this report why they think that that is the case. And to me, that's where the real value of this report comes from. So similar to like how we might have gotten into Bitcoin because of the number went up, you might say, hey, ooh, I'm really intrigued. They think it's going to be 1.3 million. That's like more than a 10x growth from where it is today. Why? And so they walk you through all those sort of things. So that was my sort of initial impression, why I think this is a helpful thing. So I would say let's just go ahead and get started. As you read this, they lay out a few different reasons. Is there one of them that stuck out to you most, or that you found most compelling as you read the report on why the price of Bitcoin is going to go that direction?
I think what I'm most interested in this Bitwise report is this whole thing about the 4-year cycle. You guys know that I have talked about the 4-year cycle. I have spent a lot of time personally thinking about the 4-year cycle. And for listeners, just a quick summary of what the 4-year cycle has been. It's this, that in 2013, which is before I got into Bitcoin, there was a big blow off top to $1,000 per Bitcoin. And then Bitcoin fell down to somewhere in the $200 to $300 range. Then in 2017, there was another blow off top. So that's 4 years later, blow off top to 20,000. Then Bitcoin came all the way down to $3,000 per coin. And then in 2021, 4 years later, Bitcoin had another top, but not a blow off top like the previous cycles had experienced. And it had a kind of a first top, and then it went down some, but then went to a little bit, just a little bit higher, to somewhere around $69,000-$70,000. And now here we are in 25. So I've been gearing up for the last 4 years. I've done all this research that clearly Bitcoin is going to have another blow off top in 2025. And the simplistic thesis that 2021 wasn't a big blow off top was because the ETFs got denied, and that kind of undercut the market. So that's kind of what I've been preparing for. I've done a lot of research over the last just couple of weeks because there've been a lot of people saying the 4-year cycle's over, and this Bitwise report makes some really good points that I'm it grieves me to say that I'm beginning to become a believer that the 4-year cycle is over, or maybe that it never was. So on page 13 of the report, it talks about cycle assumptions, and it kind of goes through, it gives some really nice Bitcoin's performance in 4-year cycles. And if you're new to Bitcoin, you need to know about, I mean, this is just understanding historic volatility of the asset. And it, I mean, it has been violent volatility, right? To ride the market from a couple $100 to 20,000 to 3,000 to 70,000 down to 16,000, and then now up to the latest top was 123. It is a roller coaster. But one of the points that it makes is that could it be that this was chance that this happened? Could it be that it was somehow also aligned with interest rate cycles? So it talks about in point number 2 on page 13 there that coinciding with some of these blow off tops have been big changes in, well, actually the opposite, not the blow off tops, the market lows. Previous down years, 2018 and 2022, have coincided with periods of rapid interest rate increases from the Federal Reserve, which means that money is all of a sudden much more expensive and debt is more expensive. And so risk on assets, as they're called, which Bitcoin up until now really has been a risk on asset, have performed very, very poorly when interest rates are going up. It's kind of a battle basically between the US dollar and risk on assets like Bitcoin has been. But I do think that actually this chance, the more I study about economics, the more I think that chance is probably the best explanation. And it's this, that when I got into Bitcoin, when I got into investing in general, and when Bitcoin went way up or when Bitcoin went way down, I was always looking for the Google News article that would explain why the market's going up or down today. And the more I have read Adam Smith and the Austrian economists, Adam Smith talked about this invisible hand. And it's basically that the market is efficient. It figures out what the right price is, but it is nearly impossible to know what the hand is that's moving the price up and down. And sometimes you can say, oh, maybe there's a correlation from this to this, but I the more I study economics, the more I think that we probably the market is very complex. There are lots and lots and lots of people buying Bitcoin. And so that's part of what in this report I've found at a kind of philosophical level that's very interesting and popped the bubble of my simplistic reading of Bitcoin's up and down. It's much more complicated. Maybe I don't understand it at all. And that makes me sad because then I can't plan for the 4-year cycle to, you know, blow off top and I'll sell right at the top and
That's it.
then
Right.
buy right at the absolute bottom. I think that's not possible. So that I think is a really important point that the report makes.
Yeah, the idea, just to explain that further, if we have any listeners who have never had that thought or attempted such a thing, if Ben can, let's just pretend he could sell $100,000 of Bitcoin when it hits 150,000, okay? Or just let's make it equal. He sells $100,000 when it hits 100,000, which suggested you had a Bitcoin, and then he's banking on it to do a 50% drawdown, right? It with that 100,000 that he cashed out on, he could spend 50,000 then, and then if he can time it correctly and buy back in a whole Bitcoin when Bitcoin's back down to 50,000, boy, he can. What a great trick that is if you can do that, right? And that's what they call timing the market. And who can truly time the market? Every once in a while, somebody does it, and we tend to treat them after a cycle as if they were a genius, as if they had the secret sauce, had the recipe, should have authored the Google article that Ben was speaking of. A lot of times, it's honestly just dumb luck. It's just truly dumb luck. And so, do you want to play that game? Do you want to be the one in a million who had the dumb luck to do that perfectly? And that's led to this. I think aphorism is what it would be called, where people say it's not timing the market, it's time in the market. I keep thinking of volatility as well. I think I've said it once before in an episode, but I'll come back to it because I think it plays into this report as well. You've got at least two types of volatility, certainly in within the lifespan of a person, if we live long enough. You've got the volatility of a toddler who spends, a lot of time falling to knees, scraping knees, but that's like a volatility upwards and to the right. They're slowly progressing. These are the little war wounds on the way to health and strength and life and maturity. But then at the other end of life, you have volatility again, and you've got banged up, scraped up knees and elbows again. If and Ben and I will beat Jared there if we have long enough life. That's the geriatric end of life, old age, when my body is not maturing anymore. I'm in many ways physically becoming that toddler again. Also volatile, but it's down and to the right, So this report does deal with some of that volatility. We can also see recently that some of the volatility is taming a bit. That's related to this report. And we can say I think it's taming for at least two reasons. First of all, the supply issuance rate roughly every 4 years gets cut in half, these halvings that we've talked about before. And with that supply issuance rate cutting to where now every 10 minutes, 3.125 Bitcoin comes onto the market, about 450 per day, 450 Bitcoin. Well, that's all the new Bitcoin that's being brought onto the market, sort of virgin Bitcoin. But you have companies buying like 8,000 plus Bitcoin a week, more than buying that new supply issuance. Between that and then companies as well, also part of the report here, that are willing to kind of buy at any price. They're trying to get a position, and they have made a determination that these are our purchase days, these are our purchase mechanisms. So whether they're just less emotional, they're forced to be less emotional, although companies can be emotional too, quite frankly, from the boardroom to executives, and the like. But yes, between these two, the volatility is dampening, but now we're just taking what appears to be more incremental steps up and to the right again, and just not as whiplashy as prior cycles, if these cycles were even a thing. Jared, what do you have?
So I think there's three things that are really powerful. I'm just going to focus on one of them. But the other two are the correlation. So here they talk about the correlation of Bitcoin to other assets and how it is so low and that's a good thing. And then the debt, they talk about the rising debt of the United States and how that is going to drive people to desire to be in store of value assets. But the thing I want to talk about is on page 8. So in their valuation framework, they talk about how and why they got to the price prediction that they did. And I think this is helpful for people to ground why they think this is going to be where Bitcoin goes. And so on this page, they talk about and list different markets that Bitcoin could be a part of. And so all that is to say is that Bitcoin is not just one thing to one person, that it can be a lot of different things to different people, can use and be used as a tool for different people depending on their situation. And so they list 7 7 different markets here. So institutional investment assets, emerging market currencies, store of value, offshore wealth, national treasury reserves, U.S. corporate treasuries, and global remittances. And those are the 7 markets that they say Bitcoin most fills. And then what they've done on this page is list the current market size in trillions of dollars, which is just still, it's crazy. We're talking about trillions of dollars. What each of those market sizes they're projecting to grow at an annual basis. And then they do that math, and then they get the projected market size by 2035. And so the first thing that you should see here is that they say the overall value, the overall investable assets, all these sort of things are going to go way up from, especially in the store of value market. So we're looking at $29 trillion to $91 trillion in the store of value market. And they say, kind of tying back to the debt thing, that is going to be driven by people looking to find a place to store their purchase time, their effort, their energy, all their value of wealth that they've accrued in something that's not and can't be debased like our fiat currency is. And so they project that store of value growth will go to 91.5 trillion. And then they set out a bear, a base, and a bull prediction or assumption, if you want to use those words, is what they call it, on how much of that will be absorbed by Bitcoin. So for example, in their bear case, they presume that Bitcoin will take none of the emerging market currencies, that it's not going to be used as a currency across the world, that there will be no nation state adoption, that there will be no Bitcoin in corporate treasuries. And that's how they get to their bear case of, well, it's going to have 2% of store value, that basically Bitcoin becomes only a store of value for a very small niche amount of people. And that price would be at $88,000, so less than where it is actually today. But in their base case, they lay out these different percentages where they're saying, hey, we think Bitcoin is going to absorb 5% of US corporate treasuries, that 5% of that is going to be stored in Bitcoin, that 2% of global remittances in 2035 are going to be used by Bitcoin. And their base assumption is that store of value wealth, so that $91.5 trillion, that 25% of that, people are going to choose to store their value in Bitcoin, not gold. And then their bull case is that 50% of the store of value market would be in Bitcoin. And I feel like we've talked a lot about why that might be, the sort of inherent things about Bitcoin, that it's much more easily verifiable. You can self-custody it. There's a much more finite supply. Its rate of inflation of what new Bitcoin is being put on the market is much less than gold now. There's a lot there, but the real assumption they're working with, how they get to this price target, is really centered on that thesis, I think. And I think that is perhaps both almost, in what we think about Bitcoin, not bullish enough. Like to say, only 25% of the store of value is going to be in Bitcoin. We would say, well, why only 25%? I mean, that seems like not very much. And so they're 50%. If it does go to that point, they also increase some of their other absorption, if you want to use that word, of other markets too. Their bull case by the year 2035 would be $2.9 million at a annual growth rate of 39.4%. And so again, what I think is helpful is not really the numbers, right? I mean, it's fun to see $1 million Bitcoin. I mean, that's great with all those zeros after it, right? But what's really, to me, valuable here is to say, hey, we're not talking like, well, I just hope it's going to get there someday. We're actually looking at numbers of, here's how much wealth is stored and used in this area. Here's how much we think Bitcoin could take from that and be used for that. And then if that's true, well, here's what the market would have to be able to absorb that amount of market use or Bitcoin use in that area. And so it's very much tied to, I wouldn't say reality, right? We don't know this, but it's tied to something that is based in a projected reality. And one more thing, and then I'll turn it back over to you guys. The annual growth rate is something I feel like I've seen a lot of people, I don't know, arguing about on X lately too, that their projected rate of return every year, right? So this is if you divide it out over the course of years, how much does it average go up? The base case is 28.3%, which in some ways is less than it's ever been in its lifetime. So the 10-year and 5-year compound annual growth rate of Bitcoin is 82.5% and 63.8%. And so those numbers, even the bull case at 39.4%, are both very low compared to what it has been in the past. And they make the case why that is, that the volatility is declining because it takes a lot more capital, a lot more investment to move the price up in that way. But nevertheless, you could look at this, not saying that it's necessarily how I do, but you could look at it and say, oh, only 28%? That's like nothing compared to what it has been in the past. Oh, 39%? That is nothing. But again, we're grounding it in some sort of reality. And hey, we think it's going to take 25% of the store of value. And that has nothing to say if Bitcoin actually becomes more used as a currency, right? They only got that at 1%. It has nothing to say if there is a international race to acquire Bitcoin, because they've only got that at 2% of a $14 trillion reserve market. And so there's just so many different ways I think that you might even become more bullish on the price, but even more so even on the adoption of Bitcoin here, that I just found this chart incredibly intriguing and incredibly fun to like wonder, oh, well, what if it goes more here in this market, or what if it goes less in that one but more over here? It's like a fun table to look at, fun table to think and talk about.
Yeah, and they even leave out what for me the slightest of critiques, an addressable market that I wish they had included in that, Jared, which is the housing market. I wish they have one market even smaller than the housing market, being global remittances, which is to say I live in a different nation where I can get a better high paying job, but I send money back home to mom and dad,
Right?
sister, brother, and the like. So that's remittances. But housing is 4 to 7 trillion, depending on who measures it. So it's right sort of at the bottom. It's down near the U.S. Treasuries. But the reason I wish housing had been in here have been for educational purposes. To me, it is one of the we could talk like I can talk about egg prices being up in the last 5 years, but there's lots of now Yahoo stories about this and why it could be. There was a bird flu. It's not economics. It has nothing to do with M2 money supply. There's all kinds of things that can get in the way there. But what's happened to the housing market so uniquely and acutely affects really all people. It's affecting it to where people are less mobile because the best house I can be in is the one I'm in now, right? And I can say that in a way that, and both of you having different housing situations than me, you can I think agree with me on that, but be on the other sort of side of the equation. But housing, it keeps going up so quickly. It's kind of stalled out a bit, but it goes up so quickly. Lending rates are high such that people cannot afford to get in houses today, even the way they could 5 years ago, and certainly not the way they could 25 years ago. It's great what's happened to housing prices for people who have houses, and particularly for the great generation now in retirement, the baby boomers, right? It's a great source of their wealth or perceived wealth. If we were to bring housing prices down, it would cause some shock to them, and they wield some power politically in the United States. But it is an absolute horror for young people. And so you say in a moment like this, how much of an addressable market is this? But what's happened to that market in prior years? And it just houses keep gaining in value. And we've talked about this before, but I'll just ask a couple questions as to review again. Is my house here in Big Bear, California, better than when we bought it 5 years ago? Answer: no. Is it better than when it was built 35 years ago? Absolutely not. Right? And rust, destroy, thieves break in and steal, and that includes things like our houses. It requires a lot of upkeep just to keep stasis, and even then, there's just things that aren't as great now as before. I'm waiting for a water heater to go, right? That's going to happen. And yet the supposed value of my home goes up and up and up. What's happening in a lot of these markets, and that's part of this report, is what they call the monetization of these different asset classes. That back to Ben talking about the invisible hand of the market, there's probably a natural value to these markets, but with the financial shenanigans that have taken place in the world, particularly in the last 50 years, with all kinds of governments, including our own, in printing currency, fiat currency, with these natural shenanigans, people who get those dollars try to figure out places that they're not looking to buy a house now so that they can use it as a utility for their families. They're looking for to buy houses as investments, and so suddenly we've got different competitors in the market. It's not just the Haupt family and the Townley family looking for family homes. It's investors snatching these up, driving the costs of all of them up. So built into their assumptions here as well, I just add that long way to add that is that each of these asset classes, because of the financial shenanigans of governments around the world, is artificially inflated. And as much as it's great if I'm an investor and I can park some money in real estate, that's a pain in the rear too. As an investor in real estate, I've got to pay for insurance for it. I've got to pay for somebody to look in on that property. Again, things break at terrible times. If I want to unload that property, it's not very liquid. It takes months to typically unload a property. It's not liquid at all. So if investors, particularly those who have bought into the housing market, not because they needed a family home, but because they were looking for a good investment with a good return. If they can find a better investment with a better return and less of a headache, they're going to start shifting their money out of those. That sort of artificial bubble or financialization, monetization on top of the sort of base value of the asset will begin to shrink. And that will be a healthy thing. It'll be a hard thing for people who have really levered into some of these markets and think it's going to be that way forever. But we could just look at the housing and the housing for families and young people coming up and say, boy, if there were a better investment vehicle out there that would kind of deflate this false exuberance in the housing market, it would be better. And I'm going to put it this way: it would be absolutely better for human flourishing. It really would. People could afford homes to live in, neighborhoods to invest in, communities to belong to, right? We could do this more readily. But then there's this great question mark. Is there a better vehicle out there to invest in to hold my wealth? Well, based on the name of this podcast and what we love to talk about, we believe there is, and that's what this report is all about. So I love talking about that as well. Not just these buckets and how there could be shifts, but why would shifts happen? Shifts would happen because the fiat games that have been played have falsely inflated a lot of asset prices. And I'll stop there.
I think that's really helpful, David. I at first when you were talking about it, I wasn't I didn't quite understand how housing could be a part of this, as if some people could put money in the housing market. But once you started describing it, I realized, oh, he's describing my situation, right? I'm renting a house
Yep.
that at 47 years old, the classic wisdom would be that's foolish. You're renting. You should be buying. You're not getting a good return on the money that you're putting into your home. But I'm renting for so much more cheaply than what it would have cost for me to buy a home. And instead of uh, putting down money into a mortgage, I took that money and I parked it in Bitcoin. And so it would be fascinating to find out. There are recently all these reports about, the housing crisis for millennials. Well, I wonder how many millennials actually have not bought a house because they have their money parked in Bitcoin. That would be a fascinating thing. And that really would then, man, can you imagine what it would do if people started saying my home isn't my investment and the store of value, and I'm going to get out of the housing market or change my position in the housing market so that I can reposition money toward Bitcoin. That would be a huge thing. Overall, though, Jared, I just love this chart because I've been in the I've been around the block with Bitcoin for a long time, and I've seen all kinds of reports come and go. I love that at the end of this report they talk about some other attempts to value Bitcoin. So the stock to flow thesis, man, was I all in, and was using it to potentially try to time the market until it didn't work out in 2021, and we all realized, oh shoot, stock to flow plan B, it's not a good way to value Bitcoin. It's not a good way to predict what Bitcoin is going to be worth. Then there came along the power law model, and I will say I'm not quite sure how their math all works out, because I thought that the power law's compound annual growth rate was 27%, and I could be wrong on that, but they're slightly higher than compound annual growth rate of the power law. At any rate, I mean, when I first see $1.3 million in 2035, my first read on that is, oh, that's kind of a bearish take. Um, that's not very good. I mean, if you compare this to other predictions of where Bitcoin would be in 2035, it's frankly not that great. And yet, great as in it's not that high, and I just want Bitcoin to go higher,
Right.
right? Number go up. But what I love about this report is how robustly they have tried to articulate all these multiple factors, and that's where they're beginning to take more seriously the invisible hand of the Bitcoin market, which is, it's really complicated, and it's not just one whale that owns the majority of Bitcoin, and they're buying Bitcoin to make it go up, or buying or selling to make it go down. There have been a lot of people frustrated in this last year or two, mostly this year. Why is it that how is it that MicroStrategy can be buying all this Bitcoin, or just strategy? How is it that all these ETFs can be pouring all this money into Bitcoin, and yet it it doesn't go up or down very much? Or people say, oh, Sailor posted and there was this little blip and it went up, and that must have been Sailor. The Bitcoin market is so much more complicated than that. I wish it were that simple, and yet Bitcoin is worth $123,000 a coin, or was as of a couple of weeks ago, because the market is way more complicated than that. And what this report does is it actually begins to really take into account a lot of these multiple factors. It doesn't do a lot on the side of supply and miners, and whether miners are in profit, and whether when miners are going to dump and when miners are going to hold. And I do think that still is part of it, but it's for sure a smaller and smaller proportion of the market when you look at numbers of Bitcoin that are produced in a single day, and how many Bitcoin miners are sitting on. But yeah, overall, I love this report because I think it grounds it much more on the demand side, and really looks at lots of different factors. So overall, I'm not excited that Bitcoin might only be worth $1.3 million by 2035, but I do think that it's a helpful report and probably grounds in reality.
Well, let me respond and piggyback. on that with you then, Ben. Two things, and you have not denied either of these things. I'm just adding them. At the end of the report, they go on and say, and by the way, as concerning our numbers, we've been conservative.
Yep.
We've been conservative because it's the prudent thing to do. Here's what I think. I think all of the authors who wrote this expect to be wrong, but towards the near term, towards the short side, not the far side. And then to add to that, they will gladly be wrong. They'll
They
be
will
like, fine,
gladly
we're
be
wrong.
long too.
Yeah.
Yeah, yeah. And then in their executive summary, right before they give that number for at 1.3 million at 2035, I think here's the higher signal than the actual numbers they gave. And this is where they're either going to be absolutely right or wrong. This one's a one or a zero for them versus price predictions. You can kind of be in the ballpark, you can kind of be forgiven, or it can happen sooner, or whatever. They say this: we forecast Bitcoin will be the best performing institutional asset over the next decade. And I can, they don't full stop there. The sentence keeps going, but I'll say full stop to that. That is their assertion. That is, I think, the opportunity for hearers, people who are curious, which is to say, okay, how did this other group of people come to such a conviction? Can I track with them? Have they given me reason to join them in that conviction, to come to a contrary position, and therefore convictions to the otherwise? But, I'll go back to what other people say. In the Rufner family, we're part of this. We're dreaming about a particular vacation in the summer of 2026. And guess what we're doing? We're putting in the time to research already on that. And yet, somehow, when it comes to money in our life, this thing that we all sweat, how many people ever really step back and put in homework on it, And I think the answer is all too few. That was true of me as well, by the way, chief of sinners though I be, up until really 2019 for various reasons. And now we're putting in the time. So I think that it would be the invitation. Is the invitation is not trust us or trust them, but rather read them. These people are writing something out of deep conviction. Can you track with them? Do you arrive at a similar conviction? And where might that send you then going forward or not?
So I want to talk about one more thing from here. So
Yeah.
on page 9, I'm always interested in how data can affect our feelings. So because our feelings are often not based in reality, right? They're emotions. And so we want to either confirm those feelings with what is, or, say, hey, maybe I need to revisit it. And so this is the section they start talking a little bit about correlation. And so this is how much is the price of Bitcoin moving in step with something else. And so they make a bunch of comparisons between bonds, commodities, gold, hedge funds, private credit, equity, and then they do compare it to real estate too. And this paragraph below that table on the right there on page 9 is just awesome. So it says, most observers consider any correlation between 0.5 to be considered low. A close examination of this correlation over time is telling. The charts below show Bitcoin's rolling 90-day correlation with U.S. equities since the inception of Bitcoin trading. It demonstrates that Bitcoin's correlation to U.S. equities has almost never been above 0.5, which would be considered low, right? In fact, despite its reputation as a risk asset, it has never had a 90-day correlation with U.S. equities that qualified as high, i.e. over 0.75. This fact surprises people, as media reports regularly describe Bitcoin as a risk asset with high correlation to stocks. Some even think of it as a high beta tech play. These perceptions stem from the fact that Bitcoin can have high correlations to stocks during short-lived and sharply negative downturns, which in the media tends to write stories about Bitcoin and correlations. And then this paragraph too. Consider the following. If you isolate the days when the U.S. equities have fallen in 2% or more over the past 10 years, Bitcoin has fallen an average of 2.6% on those days. But it has also historically rebounded faster and farther than the equity market, which is why longer range correlations are low. What a paragraph or two that is. Because I can't...
We respond to...
Go ahead.
Yeah, we respond to bad news. We correlate them on the negative days, and we say, "Oh my gosh," and Bitcoin's even worse. But then we come up for air, go on with the rest of our lives, and don't watch the slowly grinding good news that follows. Does that sound about right, Jared?
Yeah. I mean, to me, it's just like it says in clear language that it is not the risk asset that most people think of it as, or at least not if you use the determination of it as a high correlation with stocks. That's what makes it a risk asset. Excuse me. And so to me, it's just like, look at that. Like it's not a risk asset, people. Like it's right
What's
there.
fascinating is to that last paragraph. I had to read it a couple of times and think about it even after you said it. But here's basically how I would summarize it: is that when U.S. stocks go down, Bitcoin more or less goes down about the same percentage, but Bitcoin goes up way more than stocks do. And so you get the same amount of risk to the downside, but way more upside in Bitcoin. And that's why Bitcoin is $123,000 per coin, and there's no other stock that is $123,000 per one stock. So yeah, that is a fascinating, it's staggering, frankly. And that's the kind of stuff that I love, these kind of research reports that really dig into the data and blow these correlation bubbles, because that's what everybody wants. They want the simple story of, well, I understand why Bitcoin went down today or why Bitcoin went up today, but it's in the long run that Bitcoin is showing to be a very, very different thing.
And to the person who will say, "That is amazing. I'm tracking with you," but I think then I missed my window of opportunity like you guys. I think the question that person needs to ask the token Bitcoiner in their life is not just, were you investing back in 2015, 16, 17, 18, 19 when I missed it? They're going to be inclined to think they did. Ask a follow-up question, though, of the Bitcoiner in your life. By the way, are you still investing? And the answer is, or not, maybe not investing, saving. Saving is the word I really actually mean to say and lean on. The answer is yes, I am. I am. I am. So, and I think that that's true across the board. In other words, the Bitcoiner who has been in it enough years, time in the market, and has seen those gains really snowball, that typical person, I don't see them ever get to the point where they say, like, I'm done, I'm good, I made it. No, no, it's a way of life now, because it corresponds with this. Now more than ever before, gentlemen, I and friends, I pay attention to what we make, what are our what's coming in and what's going out. Sort of in a Dave Ramsey way, but I'm actually incentivized to do it because I can actually now do something meaningful with whatever amount of savings I can realize by the difference between the two of those. Prior to having meaningful savings, it's like I might as well spend exactly as much as comes in the door, right? I might as well. I might as well, because my dollars are strongest today in a fiat world. Stronger today when the paycheck comes than they will be next week, right? When the prices have gone up a little bit and the purchasing power has gone down. But now I have something I can exchange those fiat dollars for that's actually a savings technology. And I think that is a huge part of this whole report is Bitcoin as a savings technology.
That's about all the time that we have for today. Great to be together. It feels a little bit like those days of seminary when we were reading theology
Mm.
together and discussing it, and I still think that those same skills apply as we read, as we think through life. At the end of the day, Jesus is Lord, and he's coming back. But in the meantime, I reminded my goddaughter of this the other day. I don't know if this is a Luther quote or not, but the quote is, if Jesus were going to come back tomorrow, I would still plant an apple tree today. And even if Luther didn't say that, I think it's good advice for Christians to be firmly rooted in the day-to-day, even as we are always keeping an eye toward Jesus' return and being good stewards in the midst of waiting for Jesus' return. Great to be with y'all, and we'll look forward to being back on another episode to continue studying Bitcoin and how it impacts theology and the church and our faith in Christ. Good to be with you.